Just now, let's take our conversation forward. Nilesh bhai, good morning. Thank you for joining us. Nilesh bhai, from last 6 months, we've argued that this market is due for a correction. Valuations are looking slightly stretched, yet the markets have not obliged. While with each passing day, the market valuations are getting richer, and they are now trading at levels which we've never seen before. Why are markets not correcting? Uh, there are a lot of concerns on the global front, whether it's inflation or high energy prices, but the markets, if I may use the word, are suddenly Teflon coated.
So markets are driven by three things: money flow, sentiments, and fundamentals. In terms of money flow today in India, retail and HNI investors, domestic institutional investors led by mutual funds, insurance companies, pension funds, and foreign portfolio investors on an average are buyers. The only seller seems to be the promoters. In terms of sentiment, economy is opening up, growth rates are picking up, and activity levels is above pre-pandemic level. And in terms of fundamentals, corporate results have come reasonably strong. Despite second wave, June quarter results were in line or ahead of investors' expectations. So when there is a combination of three things, market is climbing wall of worries.
Do you think it will continue to climb the wall of worry?
So any market is defined by its ups and downs. Will there be corrections? Answer is yes. Will there be crash? Unlikely to be, unless one of the fundamental factors change. Corporate profitability from the almost 10-year decline has now started reversing. In FY21, corporate profitability grew despite GDP degrowth. FY22 is likely to be record corporate profitability growth. And FY22-23 also seems to be on the same expectations. Economy is opening up as active cases have fallen below 2 lakh. The vaccination is likely to cross 100 crore. And in terms of money flow, with low interest rates prevailing, there is money power, money flow coming into the market. So will there be corrections? Answer is undoubtedly yes. Is there likely to be a big crash like March 20? Most probably no.
I'll talk about two themes which are very popular themes. One is EV and second is fintech. Are you convinced that these are themes which are multi-year themes which one should look into it, or EV and fintech right now could be infra and power of 2008?
So on the electric vehicle side, is that the future? Answer is yes. There are compulsions of global warming and climate change thanks to the fossil fuel consumption. A newer technology will come which will help us contain climate changes. An electric vehicle will be one technology to achieve that. Now, the second thing comes into play is related to valuation. We have recently seen in one of the large automobile player, private equities took a stake at a reasonably good valuation, much above the market's value ascription to their EV business. So such events also will continue to shape markets' expectations about valuation. Unlike infrastructure theme, where leverage became an issue in 2008, where execution becomes an issue, in electric vehicle today, there are very few players. Governance there seems to be reasonably solid. And hence, will there be delays? Will there be governance related issues? Answer is unlikely to be no. So I think electric vehicle theme will be a long running theme. Just ensure that you are backing the right player.
Good morning, Nilesh. This is Nayantara. So if I go through your holdings, For IT, it's about 8%. The same as discretionary, which is about 8% too. Why 8% for IT? It was the outperformer of last year's earnings season. The numbers that have been trickling in, they do indicate, good times ahead. Valuations might, of course, be stretched, but then I see that Kotak recently bought Mindtree, and look at Mindtree's valuations.
So again, we are not allowed to to discuss stocks. Now, many a times people get confused. We also run arbitrage positions. And when we take arbitrage position, there's no call on the underlying movement. We are buying cash and selling future. Many times people get confused when we are underweight a stock because, I'm trying to outperform a benchmark index. I may buy a stock, but I'm still underweight relative to the index. It doesn't show my conviction. So never ever visualize a mutual fund based on the trades they have done. There might be many nuances beyond what you are seeing on the surface. You have to evaluate them on the portfolio they have built, on the investment process they have. And today, I want to make a statement that we are not in, those kind of stocks where floating stock is very, very limited and valuations can be anything. We are growth at reasonable price investors. I'm more than happy to sacrifice short-term underperformance because there's no point in buying anything at any valuation or at any price.
So you're willing to give up money being made in the short term for the long term. I take that point. But Nilesh Shah, you've often spoken a lot about PSUs and the PSU story. We've seen the comeback, the Maharaja, Air India going back to the Tatas, the LSE IPO, the finance minister in the United States is saying she's trying to push it through even before March 2022. You've seen the PSU banks run up as well. How hot is this space for Kotak AMC?
So we have been very, very selective buyer of PSUs. The real challenge with PSUs is about administrative flexibility and compensation. In many PSUs, they have the excellent manpower and excellent resources, but they do not necessarily get administrative freedom with which they can compete with private sector. For example, if you look at a private sector bank, many of the people continue to do the same function over a long period of time and develop expertise. In public sector bank, you have rotation every third year. If you look at compensation policy, the average pay scale in PSU bank is higher than average pay scale in private sector bank. But in PSUs, you are paying much more at the lower end and much lower at the higher end. In private sector bank, it is the opposite way. Now, how do you retain talent at mid to senior level when you are not paying market compensation? So these are the challenges of administrative freedom and compensation philosophy, which has made us being very, very selective on PSUs. They were available very, very cheap, and hence there has been some re-rating thanks to the strategic divestment policy followed by the government. And clearly, one of the growth story of India is where government wanted to be in businesses to government having no business to be in businesses.
Nilesh bhai, that whole argument about is there a bubble in quality stocks has started again. When I see stocks like Avenue Supermart or a Pidilite or the way with or the force with which, let's say, some of the consumer stocks have gone higher, should we seriously look at quality, this entire valuation proposition that some of the good businesses in India are priced to perfection and shareholders are unlikely to make great returns?
So Nikunj, I have a very simple commonsensical philosophy. Silver, gold, diamond, these are all valuable quality precious metals. Now, you are not going to buy silver at gold's price. You are not going to buy gold at diamond's price. Gold is quality, no doubt about it, but you don't pay diamond's price for it. When you are buying quality at any price, then you are compromising on your future return. You are assuming that these valuations will continue forever. Now, these are quality businesses, no doubt about it. But Is that business getting valuation because it is quality business or because floating stock is limited? We need to make a very, very judgmental call about it. We believe growth at any price is not good for investors' return. Growth at reasonable price is good enough for investors' return.
Do you think the dilemma for a investor or a fund manager is that there is more money and less ideas? Are we going through that patch?
See, fortunately, Nikunj bhai, a lot of IPOs are coming in. There is a fair amount of supply from the promoters, including private equity funds. So I don't think so. There is dearth of ideas. The real challenge is to find ideas where you think valuations are reasonable and you have a reasonable trade-off between risk and return. We can't be lucky like March 2020, where whatever you bought was having a great upside and limited downside from a valuation point of view. There were uncertainty related to COVID-19. And in no way in March 20, we had a view that Sensex will be touching 62,000 in October 21. But clearly there was less downside and more upside over a period of time. That upside will materialize so fast, we had no idea. Today, we are struggling to find companies where risk and returns are reasonably balanced. There are stocks which are running up a lot, probably way ahead of their fundamentals because the floating stock is limited, because floating stock is cornered among certain strong hands.
Given that we've got bunched up IPOs the next 3 to 6 weeks, and they are big ones, Nykaa, hopefully Paytm. I've been told Policy Bazaar got approval last night. There is an approval which we understand also Star Insurance has got. So we are looking at a fat IPO line, pipeline in next 3 to 6 months. Could that be the turning point? Could that be the turn for the market in terms of how money may suddenly come out of old momentum stocks from the retail side, from an HNI side, and it will go to some of these IPOs?
So as long as the IPO from a business point of view is good enough, and fortunately SEBI has done an excellent job to ensure that only good businesses come out with the IPOs. The second thing is about the valuation. As long as there is some upside for the investors, then IPO market will invariably attract capital. The 2003 bear market was ended thanks to Maruti Suzuki IPO. It was a great business available at good price, leaving upside for the investors. It brought investors who had burned their fingers in technology, media, and telecom bubble. And from 2003 to 2008, we saw a great recovery in market. A lot of it contributed to the positive investor experience in Maruti Suzuki IPO. So IPOs can bring capital into market as long as they are good businesses and they are priced reasonably.
Nilesh, since you touched upon gold in a different connotation and context, but just wanted to understand the fact that gold imports have surged almost threefold in the first 6 months of the year. They've surged to a solid $24 billion in just the April to September quarter. What is that telling you about the nature of investment and investors right now and their rush towards the safer haven?
So when gold loans had increased, critics said that this shows the despair. I hope now they will accept that when gold imports have surged, it shows the prosperity. But from my point of view, gold import essentially shows capital going out of India. On one hand, we get all the foreign direct investments and all foreign portfolio investment. And then we go out and import gold and remit those dollars back. Clearly, we are the largest holder of gold in the world. We don't even know how much gold we are owning because most of that gold is locked in tijoris and bank lockers. It's in parallel economy. It's in black economy. Such massive financial misallocation is one of the reasons why Indian growth rate has not accelerated as much as it should have. Our savings are getting misallocated in import of gold, and that gold coming into the country does not create economic activity. Now, from an investor's point of view, obviously gold gives them diversification away from India concentration. It gives them global exposure. And we need to tackle it in a manner where making financial investment is as simple as buying gold. Today, you can walk into a jewelry and buy a gold. Buying financial product is not that easy. Number two, we need to educate customers that you are already owning large quantity of gold, and hence making financial investment will be more appropriate. It will also, on the side, help country create better growth opportunities. And the third, we need to give offshore investment opportunity through, let's say, fund of fund offerings or offshore stock scheme, which mutual funds are offering, which gives same diversification which a gold will provide. So gold is a century-old habits of Indians. We need to tackle it on a gradual manner through making financial investment easier, providing offshore investment opportunities, and also doing financial education to investors.
Nilesh bhai, really appreciate your time. So glad you could join us, and thank you for walking us through your thoughts on variety of topics. Meanwhile, markets, we've got a